Alright guys, welcome back to True Forex Learn How to Trade. My name is Joseph, the co-founder of True Forex Learn How to Trade. In this class we will be talking about 3 candlestick patterns. I want you guys to focus on these 3 candlestick patterns. This is an advanced class anyway. Previously we talked about constructions of candlesticks, remember that. So right now we're going to implement those candlesticks into patterns. Okay, so when I'm analyzing the market, there are only 3 candlestick patterns that I looked out for, right, or that you may look out for. And these are not only the candlesticks, by the way. For example, if you can go to the internet and you try to search candlestick patterns or candlesticks constructions or formation, you'll have hundreds and hundreds of types, because each trader would want to promote whatever works for them. So remember, you are in a school, right? So you will be taught what we think is best, but it is also your responsibility as a learner to go out there and to do your own research, right? It is your responsibility to go out there and do your own research to advance your knowledge in this field. Remember, there's no a master of trading. There is no such. There's no a master of trading. All of us as traders, we have our weaknesses and we have our strengths. Some traders, they make a lot of money and they think they are the masters, but the market eventually humbles them. There are many traders who've made hundreds and hundreds of millions and they have lost all that money. So there are 3 candlesticks that in this lesson we would be concentrating on, but there are many other candlesticks patterns that are out there that you may familiarize yourself, or you can contact me privately, then we'll talk about other types of candlesticks patterns. Okay, the first one is a reversal candlestick. There are different types of reversal candlesticks that different traders use. I also use not one pattern but kind of different types of patterns for reversal. I'm talking about doji, hammer. I use what is this? The other one is called man, it slipped my mind. But this is a famous one that a lot of people use. And then the other one is hammer candlestick, and the other one is doji. So the entry confirmation is an integral part of one's personal strategy. So what do I mean by integral? I simply mean that when you have your own strategy, you tend to have your own systems, right, of where do you enter or where do you exit, and then you tend to have your own system of what type of entry method you would use, what type of entry system you would prefer. There are other traders that would use an entry system. Say for example, the market is going down. Okay, I was trying to use something. Okay, say for example, the market is going down, right? Say the market is going down. Okay, my pen doesn't want to write, I don't know why. Say the market is going down, so which means we'll use the black one. Okay, let me try to do this. Okay, let's try it again. Let me use the red one. Say that the market is going down like this, right? And then when there is some type of a reversal pattern below here, there are traders that would use an entry system of entering somewhere right here, right, because of a certain candlestick pattern. All right, so that is what you look for. That's what you use these candlesticks patterns for, right? They help you to enter the market. Let's say, for example, the market is going up. Let's say the market is kind of like going up, right? And then somehow you see there is a reversal, right? Then there's a pattern of a candlestick that is forming, and then you enter right there, and then the market starts to go down, right? Then you take your profits there. Okay, so yeah, this what the candlesticks patterns are used for. Even on the ranging market, the market that goes something like this is a ranging market, right? You can draw your channel. Okay, once the market comes to this level and it touches this level, it will form some type of a candlestick pattern here to tell you that there is a reversal of the trend. The market will shoot up. Then you can enter here using one of these patterns or other types of patterns. So these patterns are used for that, to give you a recognition of where you should enter and where you should exit. Like for example, if say for example you are trading the down market, and then when the market gets to this level here, okay, when the market gets to this level here, there's some type of a pattern that is forming here, and then you take your entry, and then when the market hits here, there is some type of a pattern that is forming, then you take your exit, then you get out of the market. That is what these candlesticks are basically meant to do. Okay, so let's look at this example right here, right? A reversal candlestick. What is a reversal candlestick? This is a bullish reversal candlestick pattern, right? The image above shows us a bullish reversal candlestick, and it is a singular candlestick formation. So you have different types of candlesticks formation. I like to call them constructions. When is a single candlestick, I like to call it a construction. As you can see, they highlighted here, it's a construction for me. So for example, there are two types of candlesticks, which is a pattern. Sometimes you'll have one type of a candlesticks, which is a construction, right? So if you look at this one right here, okay, if you look at this one right here, for example, if you look at this one right here, this two candlesticks, let's talk about these two for now, right? Let's talk about these two for now. You see these two candlesticks, the red one and the green one, right? They form a pattern. This is a pattern, right? They just formed a pattern, okay, because they are two, it's a pair, they formed a pattern. Now this is a bullish reversal pattern, right? Most traders, they use this to know that the market is changing from going down. Now the market might go up. Possibility, we're using possibilities. For example, the market was ranging down, right, or going down, right? Then when the market hits this level, this pattern formed, right? These two candlesticks, they appeared somewhere here. Now a trader understands that this is a signal for me to enter. When this bearish candle closes, there's a possibility that the next one would also go up. But sometimes there is a retest candle, and after a retest, then the market can start to shoot up, right? Remember, the market doesn't go straight like this. It ranges. It goes in a range system. It goes in an impulse, reverse, impulse, reverse, impulse, correction, impulse, correction, impulse, correction, right? So yes, and then as you can see right here, as you can see right here, that they are two candles right here. These two candles, they can be used as a pattern to direct you that the market is going up from coming down. And also other traders, they can use only one candlestick to tell them that there's a possibility that the market is going up. Okay, so the image above is showing us a reversal candlestick, and it is a singular candle formation, which is the bullish one. And as you can see here in the picture, we have highlighted that this particular candle had made a small shadow, okay, and also it has given you a close strong above, right? So it's a totally bullish candlestick. So other traders, they might use only this one candlestick to take an entry and go up, right? But again, it depends on your strategy. It depends on your trading system plan. What do you have? Do you use only one system to enter, or do you use 2-3 systems to enter? Okay, so this is exactly what this particular picture was telling you, right? So a bullish reversal candlestick. The image above shows us a bullish reversal candlestick, and it is a singular candlestick formation we just explained. Here is what a bullish candlestick is telling me, right? The price made a new low. Okay, I need to explain this, which means when the price opened, right? Remember, it opens here. Remember on our previous lesson, I said when a candlestick forms and it is a bullish candlestick, it opens below, right? And when it goes downwards, right, and it comes back from downwards, it shoots up, it leaves a small shadow or a stick below, and then it closes high. Then this confirms to us that this is a bullish candlestick, right? So as you can see, the price opened right here and it went a little bit down and it went up after that. Okay, all right, and the price made a new low, like I've just explained. Wick made a new low there, and then after that, the selling pressure quickly dried up as an increase of buyers entered the market. So as you can see, when this candlestick opened, right, there were sellers pushing this market to go down right here, right? But after just a little bit of a movement, majority of the buyers came in and they pushed the market to go up at that particular time, right? So this resulted in the candle closing higher of its lows and signaling a buy strength, right? So in most cases, when you see that the sellers were winning the market and afterwards the buyers came and they won the market and they closed the market above, again is another signal that there is a possibility that the market can continue going down. But that is not a confirmation. That cannot be said it is going to happen. Sometimes you might have the sellers coming in strongly and probably at this level here. Let me show you at this level here, probably at this level here, right here. Previously it was a support area, right? And right now it becomes a resistance, right? You might find out that the sellers couldn't push the market further down because they were at the support level. So the buyers came in, they pushed the market up. And then the sellers, they saw that the market is on a resistance because previously it was a resistance and it was broken, and now it could be again a resistance because previously it was a support. So previously it was a support, so it was broken, now it is a resistance. So the sellers, they might see to it that they might come in and push the market down, which they did. If you can see here, the market didn't go down as the buyers would have loved. See, there was a retest here, and again the sellers also came, the buyers also came in and they pushed the market up, and then the market went up. Okay, so this particular bullish reversal candlestick can be used like that. So when do you notice that the candlestick is bullish? It's a reversal bullish candlestick. In our previous lesson I said we will see by when the market is going down, the market is giving us impulse, correction impulse, and probably it will give us a range for a couple of hours, couple of minutes, depending on your time frame, and then eventually somewhere right here you would see this pattern forming, or this candlestick coming up, and then this could be your signal that right here on this support level the market will turn up. And when the market passes this area, which is a resistance, and it breaks it, retest it, and this pattern again appears right here, then you might take your entry right here. You might shoot up these levels or these levels here, right? What makes you to take that entry? Again, remember, the market comes from above, it's going down. This is a downtrend, right? And then when it retests at this level right here, because we don't know where the market will retest, the minute we see the market is giving us this range form, it is retesting here, we know that the possibility of the market breaking to the down is there, the possibility of the market breaking to the upside is there. So therefore we aim for patterns, we look for candlestick patterns and candlesticks formation. Once we see this pattern coming from the down right here, appearing somewhere here, sometimes you might take an entry too early, only to find out you take an entry here, and then you find out that you know, you take an entry somewhere here, you go buy here, and only to find out the market is still in a retesting mood, range mood, drag you up, drag you down a little bit, drag you down, and then eventually it surpasses this line, retest, and it goes up. So when do you note that this candlestick will form? You can note it when the market is going down, giving you a retest, forming a range, then it appears somewhere right here. You know that there is a signal that the market may break this resistance level and it may go up. So you might take your entry too early here. Sometimes it's a better idea to take your entry too early. Just draw your trend line, wait for the market to retest above your trend line. If the market breaks it, then from there, after you've made your analysis on the other time frames, remember we are talking about a strategy. Let's say we have made your analyzations, now you are looking to enter. This is what this particular lesson is all about, entry using candlesticks. Now you notice that I can go in here, then you can shoot right after you see this pattern coming up. You take your buy, put your stop loss wherever your system tells you, then you go for it. Remember, not all patterns are perfect, that not all strategies will give you 100% wins all the times, right? So what is a bearish reversal candle? What is a bearish reversal candle? Like right there we talked about a bullish reversal. Again, let me repeat myself, bullish reversal. What is a bullish market? Remember we talked about that. What is a bullish market? What is a bullish market? A bullish market is when the market comes from the left bottom side and it goes up to the right top side of your screen. Okay, that's how you can see. Okay, right, from the bigger time frames you can see the clear market condition or direction on the bigger time frame, 4 hour, 1 day, monthly, weekly. That's where you can see the true market condition, right? So this is what we call a bullish market. The market is going up. This is a buying market, right? So what is a selling market? What is a bearish market? Bullish means up, right? So what is a bearish market? What is a bearish market? Right, a bearish market is when the market comes from the top left corner and it shoots down to the right bottom corner of your screen. This is what we call the selling market. This is a bearish market, right? It's being driven mainly by people who are selling, okay, even though the buyers are there, but the momentum is going down. So right now we're talking about the bearish market. How do you see that there will be a reversal from this bearish market to the upside? Okay, the market comes something like this. When the market gets down here, you see it starts to range and it shoots up, right? And when the market shoots up, you notice that there is what we call a channel that you can draw. You can link the highs and the lows, but then these are not the highs and the lows because they are on the same price level. So you just use your support and your resistance line. So when the market breaks up here and then retest and it shoots up, this is what we call a bullish a bullish put that one there, a bullish market, right? But the bearish market comes like this. When the market is going up, now you can see the market is going up, and when the market gets it starts to retest goes up, and then boom, you notice that this pattern appears, right? That pattern appears, which is a bearish reversal candlestick. Remember, we are still talking about we are on the first one, reversal candlesticks, right? And then this bearish candlestick, bearish candlesticks appears, right? You see that within your system, after the retest, you put your resistance and support line, the market breaks underneath, and then you see that the market is shooting down. You notice that this pattern appeared, right? This pattern appeared. These two candlesticks, they just appeared. And then the most common one that we look at, the most one that we concentrate at, is this bearish one, right? It gave us a wick to the up and it closed below, right? This also can be called engulfing bearish pattern. Okay, this can be engulfing bearish pattern, right? It can be harami bearish. Okay, can be harami bearish. Right here is a harami bearish, right? And then right here is engulfing bullish, not bearish, sorry, engulfing bullish. Okay, this here is an engulfing bullish, and then this one here, it is a bearish harami. Okay, so using this bearish harami pattern, you know that when you see this pattern, your market would start to look to go down. So you might put your entry after this, right? When this candle closes, then you might put your entry to sell, then you go to the downside, right? Okay, so that is how you notice this system. Okay, this is an inverse of the bullish one, right? Remember, the bullish one would form at the support level. The bullish one would form here at the support level, right? And then the bearish one will form here at the resistance level because the market is going up, right? Sometimes it might not be exactly on the resistance, it might be also on the support, right? Because we don't know right now where the condition of this market is at. Right now we don't know where the condition of this market is at, right? We don't see whether this system is on the ranging or is on the